Alright, traders, another day, another dollar. It's pretty lucky today. I've been having this bias here about buying dollar yen, and I was pretty much geared up for that today. If they came out, I didn't expect them to cut, but I did expect them to announce a wave of new measures, and potentially the market was going to get caught short. And it ended up being similar, similar sort of price action. And we got a fair bit of the top side. Now, I didn't take profit on the trades in this streaming account, so I've still got my entries in there. But we definitely, I'm definitely going to probably hold these into the Fed. Now, the Fed, my take on the Fed is that the market is underpricing the potentiality of fairly strong rhetoric coming from Yellen, and I think that she really is going to lay the foundation tonight for the December rate hike. Now, if she does that, I think in most cases here, the US dollar will be stronger tomorrow, and depending on how she reacts to what's going on in the bond market, whether the market takes it as dovish or not, I think all in all, on the balance of risks here, the market's a little short the US dollar. And especially with the dollar yen, that's a 1-2 punch that could really help to push it into a topside range. Alright, so we'll go over what exactly happened at the BOJ, and then we'll go into a Fed preview today. Also explain what's happening else in the market. One of our favorite trades, the Aussie Kiwi, showing some signs of life, which is excellent. Going into the RBNZ. Now, RBNZ is probably much more of a risk event than people understand. Some of the data from New Zealand has been quite strong, and if they roll back their dovish rhetoric, then you might see the Kiwi dollar outperform and become the strongest currency relative, or at least relative to the Aussie anyway, in coming weeks. So, there's a few things going that we have to discuss. In terms of what happens tonight. Very important is what happens, not just what she says, but also how the stock market reacts, how the bond market reacts to what she says, and how that plays out really determines which pair we play. There's a few different pairs you play in each circumstance, but we're definitely going to focus on the Aussie, we're going to focus on the Kiwi, we're going to focus on the dollar yen as the main ways to play it. I would be playing the pound if the pound wasn't so weak. But yeah, it's just not giving us that sort of required price action or just hope. Look, the pound recovery trade, we have to wait for more pound data, and that's not coming next week. It's coming the week after. That's the PMI data. Now remember, the PMI data was stellar last month. So if it's stellar this month, then yeah, you might see a bit of a sea change again in the pound. Right now, they're running with the Bank of England's dovish tilt from last week. Although we are slowing down a little here in the pound. Alright, so first things first, check if anything's happening in the room. Go over the dollar yen. Just a quick look at the Aussie Kiwi actually. So Aussie Kiwi, haven't seen this sort of sustained rally for a while. I think it is positioning ahead of the RBNZ, just a bit of profit taking, but definitely good signs here, right? This is the strongest rally we've had in the past 6 weeks. So this is good signs. Pretty key levels coming up though, between 104.50 and 105. Probably not going to get past that very easily. You're going to need a super dovish RBNZ, and I don't see that happening. RBNZ neutral. The danger of them going neutral is quite real. What the feeling is the RBA has gone neutral though. So from yesterday, there's been analysis of those RBA minutes. So if the RBA is fully neutral, then really RBNZ has to play catch up. Otherwise, Aussie's going to just continue to outperform. But we'll look into the dynamics of that a little bit later. So the dollar yen, what happened here? It's crazy stuff, huh? Crazy. So the announcement's supposed to happen around about here-ish. there was a bit of a delay, and the further we got into the delays, the more the market got skittish, and the shorts especially got skittish, and it started to rally because it's like, well, what's going on here? Why is there no announcement? So the immediate announcement was there was no cut in interest rate, so the market fell. Then you got a whole host of new measures that they announced. So the big ones are that they've got a target now for the 10-year yield, and that they've got a targeted QE program, and that they're going to keep on with their QE program until inflation gets back above 2%. All very dovish, aggressive stuff. And really, the door is open for further rate cuts in coming meetings. So the mission was pretty much accomplished. They were a lot more detail came out from the BOJ than we expected. And the immediate reaction was short covering by the shorts as they try to process it. Europe came in and they have sold again. Now that's not very. It's a little bit. I'm gonna put a little stop to entry on my bottom trade here. If it gets down there, look, I just get out. This is weak price action since Europe started, but it's not over yet. And really, I mean, it's just going to take a few days to process exactly what they've come out with. Because no one's ever done this stuff before. No one's ever had a 10-year interest rate target. Right, so they're trying to change the dynamics of monetary policy in new and fun, fantastical ways. We might see the potential for broad yen weakening, or the market might say, well, they haven't done much at all yet, and this is just a false alarm. But yeah, I mean, market's a little mixed right here. I definitely don't recommend chasing with me in terms of this. The main reason I'm holding long is not because of the BOJ now. It's the BOJ is taking the market neutral, whereas the Fed, I think, is going to be the US dollar positive. So I don't mind being long, and potential for the sort of the wedge on the dollar yen to be a break to the top side. Now, very important what happens tonight. The wedge is that long-term downtrend and sort of meandering over here. So draw that shit in, just so we know what we're talking about here. Now, if we can break above this convincingly, right, in the next few days, I think the potential to go to 105, 106 is real. But it is contingent upon a couple of things. One of the most important things it's contingent upon is stock markets don't get heavily sold off on a hawkish Fed. If the bond market scaring comes back, it's hard for dollar yen to rally. Okay, it's if the bond market fear is put into it by the hawkishness, then you've got an issue. So she has a balancing act tonight, Yellen. She's got this balancing act where she has to be talking up the chances of a rate hike in December. You know, stating again their intent to raise rates without spooking the market into a stock market sell-off. And you know, if you only have to remember back 2 weeks now, you saw some heavy selling. All right, but we'll see how it plays out. See what she has to say. That it is generally US dollar positive. Now, moving on from the dollar yen, the market is pretty quick in moving to the next big pair, and the next big pair is the next big event is the Fed. The main mover today has been this Aussie, lifted a little bit by the Aussie Kiwi, but just generally it's one of the preferred ways to be playing weak US dollar into Fed not hike. The scenario where the Fed's hawkish, I think, is going to cap this rally pretty quickly. You might get a pop higher as the Fed holds, so a little pop higher. But I'm looking to sell between 76.20, 76.60 later tonight. If the US dollar strengthens, the Aussie will fall. So if there's hawkish rhetoric, and what we're talking about there is, say, the December's chances go from 60% to 70 to 80%. That should be good for a pullback here, reversal in the Aussie. And then if the stock markets fall, we're really going to be looking at the Aussie. So we're going to jump from, say, the long dollar yens into the short Aussies, or we can jump from the long dollar yens into the short Kiwis. Now, the Kiwi has its own little kicker because it's got the RBNZ 3 hours after the Fed. But if it's already on the back foot, I think the RBNZ won't save it so much as potentially be an accelerator. So I don't know. Say you trade one lot size, you might put half a lot with the Kiwi, half a lot with the Aussie. If stocks really start to sell off and the market responds to yelling, that's the way I'd be playing the negative side. I wouldn't be selling the pound down here, and I wouldn't be playing the euro at all today. Just you're not getting enough out of the euro. But if she's taken as a little bit hawkish, but stocks rally because generally everyone's happy that it didn't raise rates. Dollar yen long seems okay to me, and if risk is on, I like dollar yen long. I don't want to get caught Aussie long. I mean, Aussie should do okay, Aussie yen should do okay, but the Aussie itself against the US might be capped by a bit of US dollar strength. So depending on if stocks rally with Yellen, I'm long dollar yen. If stocks fall with Yellen, I'm short Aussie. That's to summarize the two plays I'll be making this morning, early next morning. So. Oh shit, guys! How long was the rant interrupted for? I was in a full fucking rant mode. Should have checked the comments. How long was it off for? Where were you at? Okay. I was talking about the dollar yen, and the market was caught a little short, and they've gone a little bit more aggressive than expected, but they didn't explicitly cut rates, so the market sold again into that rally. But it's more setting the dollar yen as a neutral footing, and that the Fed, if it comes across as hawkish and US dollars rallies and stocks rally, I'm long dollar yen. If the Fed comes across hawkish and the stock markets fall, I'm short Aussie. And I don't really have a play for if the Fed is dovish. I mean, obviously it's going to help my long German DAX, which is doing its own little rally here. It's nice. Where is it, DAX? But I'm not in any mood there to chase with currencies. The main way to play it is Aussie long, but I don't want to be buying Aussie above 76, which would be quite easily if the Fed is dovish. So we come across dovish if they lower growth forecasts, and if Yellen answers in a less aggressive tone to questions about her ability to raise rates. She's going to say data dependency stuff, right? But she adds a little bit of spice to the data dependency line, saying something along the lines of majority of, or many of the members were in favor of moving today, or something along those lines, right? Then you might see that US dollar strength that I'm looking for. All right. So yeah, I don't even know where we're at because you guys saying that I cut off for 5 minutes. I'm not sure why that happens every now and again. I'm gonna upgrade the beast. The beast has served me well, but there's too many little issues happening. I mean, I don't get a warning from the program I'm using. I can't show you the program because it'll break the internet. You'll see what I mean. What? Yeah, no, I'm into Aussie Kiwi DRCB, but I'm not a believer of this rally. I think this is just short covering ahead of the. I don't think this is a big rally, and I'm not banking on the RBNZ to come out and help us. But yeah, this is a nice little rally if you've got in low. This is a good opportunity to take 100 points profit, but I suspect we're going to struggle to get past 105 unless the RBNZ surprises. Yeah, we're avoiding the pound, we're avoiding the euro. I'll just recap quickly. We're playing dollar yen long with the hawkish Fed, and if stocks crash, we're playing Aussie short, maybe Kiwi short, especially if the RBNZ helps out. And we explained what happened with the new 10-year targeting from the Bank of Japan, which could end up being ultra yen negative in coming days, guys. It's still, people are still wondering what the hell they've just done. Let's have a look though at some research, because it will be better explained by a few reports. We're going to actually have a look at a few Fed previews like we did with the BOJ yesterday. And unless you guys have a particular pair you want me to watch right now, just tell me the screen's not crashing. I don't mind buying the pound, guys. I just it's not. There's no reason to go to war with that pair right now. You want to wait for a little bit more bullish price action. Pound back above 130 at least, and a dovish Fed potentially. Then you could chase it on the top side, but there's better ways to playing a dovish Fed. Just straight stocks. All right, so Nomura. The BOJ has introduced a new policy framework, QQE, with yield curve control. So the BOJ is abandoning the average maturity target of its JGB purchase program, which was 7 to 12 years before the announcement. Instead, the bank says it will purchase JGBs to keep 10-year yields at around 10%. Effectively shifting to a yield target type policy framework. Now that's the first move that they'll do before they start cutting rates, from what I've read elsewhere. The bank says it will still purchase JGBs more or less in line with current pace, but its focus now will shift to yield curve management from the pace of QE expansion. Bank also amended its ETF purchase program, that's a stock buying program, to keep pace with the purchases unchanged. It plans to purchase 2.7 trillion yen of Topix Leaks ETFs out of the total ETF purchase program of 6 trillion. The BOJ decided to allow overshooting inflation more clearly, which is ridiculous because they've never had inflation for decades. The bank will continue expanding the monetary base until the year-on-year rate of the increase in observed CPI exceeds the price stability of target of 2%. It stays above this target in a stable manner, essentially ruling out any potential for a start to clear tightening as long as inflation remains below 2%. In terms of immediate policy decision, the BOJ did not cut its policy and left the pace of QQE policy unchanged, but made tweaks to the QQE mentioned above. Alright, let's have a look at given subdued expectations ahead of the meeting, dollar yen should stay relatively strong without a rate cut, thanks to a couple of positive surprises. At the same time, the outcome may not be significantly positive for the dollar yen ahead of the FOMC. Profit for taking flow will likely exert pressure on the dollar yen, especially if we approach 103. No, if they wrote this before it went to 103, then they've done a good job on that. the reaction of the long end of the curve is crucial. In addition, the bank has shown its commitment for further easing when necessary, and thus we should focus on Governor Carter's stance on the possibility of further easing as usual. Okay. Alright, so they're still open to cutting rates. It's probably going to be the focus of important comments coming from the BOJ soon. As long as dollar yen stable to rallying, it's not going to be a major theme. Let's see if we can find now a bit of FOMC data. Yeah. Brexit stuff is hurting the pound. There's two banks arguing for a rate hike tonight, Barclays and BNP. Now, they're not small banks. So, I mean, that's 2 out of 30. It's not a lot, but it's not nothing. More specific on the we'll get more specific on FOMC, guys. On a side note, the New Zealand dollar got smashed here because the dairy auction was weak last night. That started this Aussie Kiwi rally. So there's forecast to be another big increase. It was just a small increase. So that's took a little bit of the wind out of the Kiwi. It had definitely not been able to track the Aussie higher so far. And probably can't until after the RBNZ, right? Pretty low on the reports today. Look, I might spend a little bit of time on the RBNZ as well later. Alright, yeah, so hawkish hold is something that we've heard a lot. It's probably what I think the majority are believing. I think that's the majority believing it because it's most likely. If it ends up being a non-event, that'll be interesting too. Probably US dollar negative if it's a non-event. Oh, Jim Reed, good. So I'm probably going to get up for this one. Not that I really expect them to raise rates or anything crazy. I just really want to see the stock market's reaction. I think there's some easy money to be made if it's clear the stocks are reacting to a hawkish Fed. I think it's going to be something which will be sustained in coming days, coming weeks even. Alright, so Deutsche Bank's Peter Hooper expects the statement of risk to be upgraded to nearly balance from have diminished. Yeah, and Yellen may indicate that there's been an active discussion of a rate hike at this time. That'd be pretty hawkish if it came across like that. So Bank of New Zealand, this is not the central bank, this is just the NABS, New Zealand affiliate. Dollar index, we haven't looked at that lately. The dollar index, is nothing wrong with playing the Fed announcement via the dollar index. Has been a bit constructive in the previous few days, threatening to break to the top side. It's a pretty clean way of playing it, right? You don't have to worry about the other pair so much. It's just straight up US dollar. So this is if the Fed's hawkish, we're buying, probably targeting 98 to 100 in coming weeks. But yeah, I don't trade it too much, so I'm not gonna go analyze it for you guys. But it is something to keep an eye on every now and again, just to see how broad-based the US dollar strength is, or if it's something straight like dollar yen movement or euro movement. Sometimes it can be a little less clear what's exactly moving. Funky little graph. Alright, let's have a look at some of these trades that have been posted in the room today. See how they traded through the BOJ. I closed a lot of the 0.5 positions. Anything small. I had a lot of 0.25 positions. On Aussie Kiwi and on Euro Pound. I was just trying to make it a bit cleaner, and also the Euro Pound hit those stops. Alright, FX Stash. Chasing the dragon. Alright. Let's see when you got this. Okay, you got this before the break. Excellent. Who is this? Who is this? Rapid. I like it. That take ball's been hit already. Billwin just doesn't care about stops, right? He just keeps on buying. He would have been stopped out earlier today on the trade from yesterday. keen, isn't he? Can't just keep buying, mate, and say that you got it right in the end. Oh, I added a lot of money into the account, Amber. I think more than a week ago, though. Definitely wasn't from winners. Yeah, this little candle is poking up. Definitely got the attention of myself as well on the weekly. I don't mind selling. It is a little bit contingent upon the Fed and the RBNZ, but yeah, the charts say it's about time, right? So yeah, I like this chart too. JS Forex. Keep a note, guys, that OPEC meeting is not that far away, next Tuesday. So anything with the CAD is going to get a little bit more dangerous. Selling the CAD, as is, but it shouldn't be too bad. Derek, that's a good point, mate. Internally on the global milk prices, it is the whole milk powder. I think that's what they export a lot to China for baby formula and things. Yeah, so that is an important. I didn't look at the internals, but if that's the case, then that's probably why they did run with that. So that's a good pickup, mate. Alright, so yeah, I'm going to be in the room, guys. I'm going to be in the room probably tomorrow morning. If you have any questions, just give me a PM. I'm going to be holding dollar yen and long DAX into this. That's probably the only thing going to be affected. And I'm holding long Aussie Kiwi into the RBNZ. So that'll be the two trades I have going. I might get stopped out of one of my dollar yens here though if the pullback continues, and I'm happy with that, because if the pullback gets even more serious, then perhaps the rally is a false rally. So yeah, you don't really want to fight the market, right? Not dollar yen market. We'll see. Definitely looking better 2 hours ago, wasn't it? But these are the sort of trades I'm not looking for 100 pips. I'm looking for 106, 107. So you can't just close out willy-nilly on the first turn. But this turn has turned into a bit of a collapse, so that happens. On my FX book, I think I turned them all off public. To be honest, those smaller accounts that don't have too much action going on, literally look very similar to the current. Just got a bit of Aussie Kiwi and a bit of Mexican, dollar Mexican low, short. A bit of Aussie Kiwi, a bit of Euro pound short, and a bit of dollar yen long. A little bit of pound yen as well, but that's a dangerous trade. So yeah, there's not as much risk as I have in this streaming account. So I'm not really paying attention too much to those at the moment. Alright guys, but yeah, I'll link them later. There's no issue. Yeah, dollar Mexican short. Little crazy trade there. We'll bring that up actually. I want to get into that. That's a Trump trade. So Trump loses. Dollar Mexico will fall probably down to the low 18s, 17s. If he wins, it might go to 25. Yeah, so Let's sell a little just to have a taste. We'll keep track of this one going into the US election season. It's a high yielder, so it's a good carry on it. But it is not in an uptrend. It's the weakest currency in the world, right? It's getting ripped apart. So, you know, the potential for reversal if Trump says something ridiculous, which is a matter of time, then is pretty real. Big debates coming up too, so that could be interesting. Alright guys, good luck tonight. I'll be in the room for the FOMC. If you have any questions for me tomorrow, send me a little PM and we'll have a look at it. Otherwise, tomorrow we're just going to review what happens. And potentially I've got a lot of trades coming, right? We can form our view for the medium term based upon how the Fed plays tonight. Alright, trade safe guys. Don't do anything crazy. Not till tomorrow.